Reserve Bank governor has hiked the monetary policy rate to 8%, a move that surprised the markets. The key borrowing rate is increased by the same amount, around 6%, and the key lending rate to 10%. What has been the reaction from the market to this move?
The market didn't react yesterday, being that the announcement came pretty much close to after trading. But our expectations for this today's trading is pretty limited in terms of we think that the MPR is a limited tool to manage inflation. I think what will get more discussion will be the increase in the cash reserve ratio by about 100%. On that front, there will be questions around net interest margins for banks as well as credit growth.
And of course, hiking in interest rates means that borrowers have to pay more interest on loans. Could we see any reaction from banking stocks today? Have you seen any reaction so far?
There have been questions definitely for the mid-tier banks. I think the first-tier banks are probably in a better position, have more latitude, I would say, to managing their net interest margins. We suspect that the impacts will be felt more by the mid-tier banks going into today and potentially into the next few trading days. If any, we think that the impacts will only show on the mid-tier banks.
Which banks in particular would you be cautious of buying into at this stage then?
Right now, potentially some of the rescue banks definitely for us are not on our radar. So I would say the rescue banks for us are not on our radar, and those include Oceanic Bank, Union Bank, AfriBank, etc.
Now, Sanusi also defending the cash limit policy, saying that in a sense it's a necessary evil to modernize the financial system and move the economy to be less dependent on cash. Is this something that the market is comfortable with now, especially over in Lagos, where they're going to be using Lagos as a model? They're calling it Project Cashless Lagos.
I think the market has quite a bit of time to react to that. There have definitely been lots of questions from different quarters, but I think that as long as the central bank and financial institutions are able to provide POS terminals, internet banking, etc., which to an extent will give banks more non-interest income, we will be comfortable by June 2012.
Leah, after 2 straight days of losses on the bourse, could we see more depressed activity, or do you see some potential upside in the markets in the next coming days?
I'll say that the markets could potentially trade sideways. The losses that we've seen this week have been quite limited. We've only seen about 20 basis points between Monday and yesterday. I see the markets looking forward to the inauguration of the new administration on May 29. Potentially next week could be a more interesting week, in my own opinion.
Any stocks that you have your eye on at the moment, though? Because there are some big losers from yesterday, especially on the banking sector. Diamond Bank falling 5%, paints and coats manufacturers giving up a similar margin there.
Yes, as a house, we do like Zenith Bank. We also like First Bank, which I think lost some basis points yesterday. Zenith Bank's ROE for 2011, we see that coming around 15%. The average for the sector is less than that. We think that Zenith Bank is in a position to manage its interest spread. The same relates to First Bank. So we like First Bank, we like Zenith Bank as well.